Let's spend a moment and talk about technical analysis as a tool or a strategy to evaluate stocks. You might have also heard this known as charting or maybe momentum investing, all very similar. But really what technical analysis is, or really what it isn't, is it's not looking at fundamentals. Fundamentals investing would look at things like the ratios, for example, price to earnings ratio or PEG ratios, or all sorts of different ratios that you can look at, return on equity to return on assets, you name it. There's lots of ratios out there, from debt ratios like debt equity to liquidity like current ratios and those types of things as well. So technical analysis looks at none of those ratios and doesn't care about ratios, or doesn't care about how our sales, or doesn't care how profits are, it doesn't care about how the company's maybe looking from a qualitative standpoint. It throws all that out the window and is really looking at it from a charting or prediction type thing, where they're looking at past movements of the stock price and price and or volume of the stock, volume being how often it's being traded or how many shares are being traded on a daily basis, and looking at price, how's the stock price moving up and down to predict the future. So it's all about, if we can look at a chart and look at patterns, then we can maybe predict future results based on these past patterns. So it's all about looking at patterns, looking at scenarios, situations, and very much looking to predict the future, not based on analysis per se, but more so on analyzing charts or patterns. So it's very much a trading tool. It's supposed to, let's say, long-term investing, or you're buying this company, you're investing in this company, you are an owner of the company, is very much looking at the charts. And when the chart says buy, you buy, and when the chart says sell, you sell. So the assumptions around this, around charting and things, and we'll look at an example of one of these types of assumptions or ways that you can trade, is that the market price is the actual price as far as that all information is known. So it's thinking of it as, yes, what the stock price is selling for, all information is known, and that it's a very fair price, and thus there's no value component to it as far as something being undervalued. Is looking at that, yes, that stock price indicates that it's a fully valued stock, and that all stocks are fully valued. So if you're a value investor or a contrarian investor looking for those stocks that are on sale or maybe underappreciated or undervalued, technical analysis or charting would say, forget all that. That doesn't mean anything. It's not even true that we're looking at these stocks that they're fully valued, because you have to have them be fully valued in order to have predictable stocks. If they're undervalued, well, then they can't be predictable from a charting aspect. And it's all about price movements, and the belief is that price movements in stocks are not random events. If you're a chartist or looking at charts, you're thinking movements of prices of stock and the volume, the trading of stock, are predictable things that can be looked at in the past and predict in the future. So very much a trading type of tool, and very much all about looking at these charts. So you analyze charts over these various time frames, and you're looking for patterns. You're looking for trends. How strong a trend is. Maybe it's a trend going one direction that might say sell, or let's say buy, and the trend looks good, but maybe it's not strong enough to actually make a purchase. Or it might be going down the same thing, whether to sell or whatever. And the whole thing is, how likely is that trend to continue, and will it change or move in the opposite direction? And you have things that are called support and resistance areas, where it's supported at the bottom and maybe resist at the top. So you have this band of stock prices as they go, and they might get to the top and have resistance, or the bottom, and they'll come bouncing back up off the bottom. And you're using the chart to kind of predict all this. So if you're interested in things like charting and that kind of stuff, learn more about it. I mean, we're touching the real basics on, give you an introduction to it, but it takes a lot of information, a lot more training behind it than you'd have in a course. In this course, you'd want to have a specific course around technical analysis, charting, and read up on it, and really get comfortable with that and understand. I would say that's more trading versus, let's say, investing, but it's a tool that people use. So let's take a look at one of the example charts so you get a feel for what this kind of looks like. So when somebody does a technical analysis, they'll look at the stock chart, look at a kind of graphically how it looks. And at the top, you can kind of see the price movements, it's for low prices and then moving up to high prices. And this particular example, you can see they're kind of bouncing up and down as far as the stock price. And at the bottom is the volume, how much is being traded, and all that through the same period of time. So you look at a period of time, comparing stock price and volume, and you're looking for patterns to make decisions whether to buy or sell. This happens to be called an ascending triangle or a continuation triangle. A chartist would call it that. And you can see how it's kind of got this triangle, in this ascending type phase looking at the stock price. You see how it's reaching bottoms and then ascending up. So from that, you can predict when am I going to be ascending up again, and when will I have this base of support along this bottom of this triangle? And when I get to the bottom of the triangle, maybe that's when I'm buying, because I'm going to go back up and then keep selling and trading all throughout within that triangle. So you can see where it's ascending. Obviously, there'd be one that would be called a descending triangle, where it'd be something that's going down and maybe you don't want to buy or you want to sell. So from a chart aspect, that's all you're looking at. You're not looking at price to earnings ratios. You're not looking at dividends. You're not looking at undervalued stocks. You're not looking at growth at a reasonable price. You're not looking at the industry or the sector or the business. You're not looking at large cap or small cap per se. You're looking at charts, and you're becoming an expert at looking at graphs and charts. Hey, it's great. A lot of people do it. If you want to do it, find out more. That would be my only advice to you. I'm not a big chartist. I will look at charts and things to help support some of the things that I do in a very basic kind of way, and look at how the prices are, especially if they're nearing like 52-week lows as far as prices, looking for undervalued stocks or comparing to the industry. But I'm not a strict chartist who would say, forget all that, just look at the chart. So if it's interesting to you, find out more. That would be my big advice for you on charting and technical analysis. Understand what it is and what it isn't, and find out more. And think about more of it as a trading tool and something that's going to be, going to take a lot more investment of your time and energy and expertise and really develop that. And maybe it's for you, maybe it isn't. It hasn't really been for me, and I've been successful well without it. But for others, they might love charting. So if you're interested, find out more. But that's charting and technical analysis.